Bismillahirrahmanirrahim. Today's topic is objective of an audit. The objective of an audit of financial statement is to enable the auditor to express an opinion whether the financial statements are prepared in all material respects in accordance with an identified financial reporting framework. When the auditor expresses his opinion, he expresses in a way that the statements give a true and fair view. This is one expression. The other expression he can give: the financial statements present fairly in all material respects. These terms are equivalent, whether the auditor expresses in this way or he expresses present fairly in all material respects. Important note in this respect or auditor's opinion is that it increases the credibility of the financial statement, reliability of the financial statements, but it is not an assurance that the entity will be viable in the future, nor it is an assurance how effective and efficiently the management has worked during the accounting period. While doing audit, the auditor should take care of certain points. One is attitude of professional skepticism. What do we mean by this? That the auditor should plan and perform audit with an attitude of professional skepticism because financial statements may contain material misstatements. What do we mean by this is that he should proceed with critical assessment with questioning mind. He should put questions where he think that the feel doubt in financial statements, and he must be alert to audit evidence which contradicts certain facts. And the third is he must do questions about the reliability of the documents. He must not accept any documents without doing questions, and until he is convinced that the document is reliable. The second point of consideration is sufficient appropriate audit evidence. That auditor should obtain enough audit evidence so enable him to give his opinion on the financial statements. And secondly, the audit evidence must be relevant to the financial statements. If the audit evidence is not sufficient, how the auditor can make an opinion on that? And if it is not relevant to the statements, how he can make an understanding of the financial statements? The third point of consideration is scope of the audit. By scope of audit, we mean the audit procedures necessary to conduct the audit and achieve the objective of audit. The scope refers to the procedures required by international standards on auditing. The second point which needs consideration is sufficient appropriate audit evidence, which means that the audit evidence must be enough to enable the auditor to give his opinion on the financial statements, and the audit evidence must be appropriate, that means relevant about the financial statements. If it is not relevant to the financial statements, how the auditor can give his opinion on the financial statement? The third point under consideration is scope of the audit. By scope of audit, we mean the procedures required for conducting the audit or given by the identified financial reporting framework, so that the scope refers the procedures required by international standards on auditing, relevant professional bodies, or which is required by law of the country. The fourth point of consideration is reasonable assurance. The auditor, with reference to international standards on auditing, when he is performing audit according to the rules and regulations of international standards on auditing, he is to provide reasonable assurance that financial statements taken as a whole are free from material misstatements. He will not give the 100% assurances because inherent limitations of audit which affects auditors' ability to detect material misstatements. For example, use of testing. The auditors generally audit 3 months from the whole year or 2 months from the whole year as the circumstances permit. They do not audit the whole year's accounts. Therefore, there is a chance that the material misstatements remains undetected. And the fifth point is while the responsibility of financial statements. While the auditor is responsible for giving and expressing his opinion on the financial statements, the responsibility of preparing and presenting financial statement is that of the management of the organization under audit.